Hey, finance enthusiasts! Welcome to Your Dollar and Cents. Today, we're tackling a hot topic, inflation. Did you know it's hitting record highs in the current market? Stick around to learn what inflation is, how it's impacting today's economy, and why it matters to you. By the end, you'll be equipped with essential insights to navigate these economic challenges. Don't forget to subscribe for more financial wisdom. Let's dive into the world of inflation right here on Your Dollar and Cents. Causes of inflation. Now that we've set the stage on the current inflation scenario, let's dig into the root of the matter, the causes of inflation. Understanding these factors is key to navigating the economic landscape wisely. So what leads to the surge in prices and the decline in your purchasing power? Well, inflation isn't a one-size-fits-all phenomenon. It's often influenced by a combination of factors. First on the list is demand-pull inflation. This occurs when the demand for goods and services surpasses their supply, creating a bidding war that drives prices up. Think of it like this. When everyone wants the latest tech gadget, but there aren't enough to go around, prices skyrocket. Next up, we have cost-push inflation. Picture this. The cost of producing goods and services increases, often due to rising wages or the price of raw materials. As a result, businesses pass these higher costs on to consumers, leading to an overall increase in price levels. Lastly, a factor that's become increasingly relevant in today's globalized world is imported inflation. This happens when a country becomes more dependent on imported goods, and fluctuations in international markets impact domestic prices. So, changes in exchange rates and global economic conditions can directly affect the cost of goods in your local market. Understanding these causes is crucial for making sense of inflation's complexities. Stay tuned as we unravel more economic mysteries right here on Your Dollar and Cents. Impact on consumer spending. We navigate the intricate landscape of finance. Let's zero in on a topic that hits close to home for all of us: the impact of inflation on consumer spending. It's not just about numbers on price tags, it's about the tangible effect on your everyday life. Consider this: as inflation looms, your purchasing power diminishes. That means the money you had yesterday doesn't stretch as far today. It's a subtle but significant shift that influences the choices you make as a consumer. Now think about income redistribution. In an inflationary environment, not everyone bears the burden equally. Fixed-income individuals, like retirees or those on a set salary, may struggle to keep pace with the rising cost of living. On the flip side, those with variable incomes or investments tied to assets that appreciate with inflation may find their wealth on an upswing. Adding to the mix is the element of uncertainty. When prices become unpredictable, consumer confidence can take a hit. You might find yourself hesitating on major purchases or investments, uncertain about how the market will fluctuate in the coming months. Let's touch on shoe leather costs. No, it's not about your footwear. It's about the increased expenses tied to frequent visits to the bank. As prices rise, individuals may withdraw money more frequently to avoid losing purchasing power, incurring additional costs in the process. Understanding the intricacies of how inflation impacts consumer spending is vital for making informed financial decisions. Investment strategies in inflationary environments. Inflation doesn't just affect the price of goods. It has a profound impact on how you should approach building and preserving your wealth. Consider this: in an inflationary environment, the traditional playbook may need a rewrite. One significant impact is on the real rate of return. That's the return on investment after accounting for inflation. Inflation erodes the purchasing power of your returns, meaning that even if your investments are growing, their real value might not be keeping up with the rising cost of living. Now let's talk about asset allocation. In times of inflation, certain assets tend to perform better than others. While fixed income investments may struggle to outpace rising prices, real assets like real estate and commodities often have the potential to retain or increase in value. Diversifying your portfolio to include a mix of these assets can be a strategic move. Another consideration is dividend-paying stocks. Companies that regularly pay dividends can provide a source of income that potentially keeps pace with inflation. The key here is to identify companies with a history of stable dividends and the ability to adapt to changing economic conditions. Let's touch on the importance of flexibility. Inflationary environments are dynamic, and the ability to adapt your investment strategy is crucial. Keeping a close eye on market trends, regularly reassessing your portfolio, and being open to adjusting your approach can help you stay ahead of the curve. Government responses and policies. In times of economic challenges, governments play a pivotal role in shaping the course of the financial landscape. When inflation rears its head, governments often find themselves at a crossroads. One impactful response is through monetary policy. Central banks may opt to adjust interest rates to influence the overall money supply. By increasing interest rates, they aim to curb spending, which can help rein in inflation. Conversely, lowering interest rates may stimulate economic activity, but can exacerbate inflationary pressures. Now let's talk about fiscal policy. This involves government spending and taxation. During periods of inflation, governments might implement measures such as reducing spending or increasing taxes to cool down the economy. The goal is to strike a balance that promotes stability without stifling growth. Another tool in the government's arsenal is currency intervention. In a globalized world, fluctuations in currency exchange rates can impact inflation. Governments may choose to intervene in currency markets to stabilize their currency and mitigate the impact of external economic factors. Consider price controls as well. Some governments may opt to directly regulate the prices of essential goods and services to prevent excessive inflation. While this can provide temporary relief for consumers, it also comes with potential drawbacks such as shortages and market distortions. Understanding the intricate dance between government responses and policies is crucial for deciphering the economic landscape. Global perspectives on inflation. In our interconnected world, economic events in one corner can send ripples across the entire financial stage. Inflation isn't a challenge confined to a single country. It's a global puzzle with interconnected pieces. One major impact is seen in trade dynamics. As inflation rates vary from country to country, it can affect the competitiveness of exports and imports. A country experiencing high inflation might find its exports becoming more expensive, potentially impacting its trade balance. Now let's talk about currency exchange rates. Inflation differentials can influence the value of currencies. A country with lower inflation rates may see its currency appreciate against those with higher inflation, affecting international trade and investment. Global commodity prices are also in the mix. Inflation can drive up the cost of essential commodities like oil and food, impacting economies worldwide. This interconnectedness means that events in one region can have far-reaching consequences for consumers and businesses in another. Consider global economic policies as well. Central banks and governments collaborate on strategies to address inflation on a global scale. Coordination in policies can help stabilize the international economic environment, fostering a more predictable landscape for businesses and investors. That wraps up our deep dive into inflation. If you found this video helpful, give it a thumbs up and make sure to subscribe to YourDollar&Sense for more insightful content. Your support means a lot, and we look forward to sharing more financial wisdom with you. Until next time, stay informed and stay tuned.